Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Now in this particular video we are going to be discussing bilateral chart patterns. All right, this is what we're going to be discussing in this video. Okay, so if you are a trader, looking to enhance your trading skills and stay ahead of the market, just know that the Forex Geek is for you. Okay, the Forex Geek channel is for you. We cover a lot of insightful information in this channel, so stay tuned. All right, so now getting right into it, what exactly are bilateral chart patterns? Okay, these patterns, including triangles and rectangles, are formed when the price moves in a range-bound market. Okay, that's when the price moves in a range-bound manner. Sorry. So basically, that is it. Okay, they indicate a period of consolidation where traders are waiting for a breakout. Understanding these patterns is crucial as they can provide key insights into future price movements. Okay, so now basically we have bilateral, some examples of bilateral patterns are, triangle patterns or rectangle patterns. For example, we can see this is a triangular pattern, right? This is a triangular pattern. So it's an example of a bilateral pattern. We can see we had a triangle, we had a descending triangle here before a breakout happened. We had a breakout around here. Okay, let's just see if we can find any other bilateral pattern real quick. Okay, we can see we have a rectangular pattern around here, right? We can see, let me just insert a rectangle. We can see that we had a pattern. You can see price was consolidating within this zone. Let's just say from around here to here, right? We can see we had another bilateral chart pattern here. Okay, so basically they are mostly rectangles and triangles. It could be a symmetrical triangle, it could be an ascending triangle, it could be a descending triangle. Okay, so basically those are the kind of patterns that we call bilateral chart patterns. Okay, those are the kind of patterns that we call bilateral chart patterns. All right, so the bilateral chart patterns are quite easy to find. Okay, they're quite easy to find, and they can help us indicate potential. They can help us indicate potential breakouts, like when a breakout is building up. For example, when a breakout is building up, these patterns can help us to spot a breakout. For example, in the case of a triangle, we can see that when you have a triangle, it means that either price breaks out of the hypotenuse, or that is in the case of an ascending triangle or a descending triangle, because those are made up of horizontal line and a diagonal line, right? So in the case of a descending triangle, as we can see here, it's either price breaks above or price breaks below the horizontal support. Okay, so basically they indicate a period of consolidation and a potential breakout, right? To show that a potential breakout is about to happen. And in the case of a horizontal consolidation, which is a rectangle, it shows that a breakout is probably going to happen anytime once the resistance is broken or the support is broken. And you can see in this case the resistance was broken and we had a valid breakout. All right, so bilateral chart patterns are quite easy to identify. Okay, they're quite easy to identify. This is a triangle. We can see this one is a descending triangle. Then we can see that this is a rectangle. Okay, all right. Now, identifying these patterns requires keen observation. Okay, you just have to look for convergent trend lines that show a tightening price action. For triangles, you'll notice higher lows and lower highs. For example, in this case, we are having lower highs. If it was an ascending triangle, it's going to be higher lows. Okay, If there's an ascending triangle, it's going to be higher lows. All right. So for rectangles, the price will bounce between support and resistance levels, as we can see here. The key is to watch for volume spikes during breakouts, which can confirm your analysis. Now that you know how to identify these patterns, how do you apply them in your trading? Consider setting your entry point just above the upper trend line of a bullish breakout. For example, we had a bullish breakout here and we had a retest, as you can see. So you can just enter your buy trade after the retest, and then your stop loss can be just below the breakout point. Okay, just below the breakout point. Then as for the case of horizontal breakout, you can enter after the breakout. After you have a retest, the retest could show on a smaller time frame. Then you enter and you set your stop loss just inside the consolidation zone. Okay. Then as for take profits, well, you can use the nearest resistance level for a take profit of a buy trade, or for a take profit of a sell trade, you can use the nearest support zone. Okay. Always use stop losses orders to manage risk. This way you can protect your capital while taking advantage of potential moves. All right. Understanding and utilizing bilateral chart patterns can significantly improve your trading performance. Remember, the key is to stay patient and wait for confirmation before making your move. All right. If you found this video helpful, please give it a thumbs up and subscribe for more expert insights into Forex trading. Happy trading, and I'll see you in the next video.